Welcome in or welcome back. We are hot off of receiving Tesla's Q1 2020 earnings report, and I've got to say that I am probably as excited as I have ever been to be an investor in Tesla, despite the fact that the United States is coming off of probably the most abrupt economic halt that it has ever endured, at least that it has endured in most people's lifetimes. I have 10 main points that I would like to talk about. Um, if you'll forgive me for one moment, I forgot to write the 10th one down. Um, Coming off of this, the first six are basically numbers based, and after that, we get into some speculation. But number one, $1.14 of earnings per share. A loss of 21 cents was expected by Wall Street. This comes out to a profit of 9 cents per share. This makes three consecutive profitable quarters for Tesla. This plus $5.98 billion in revenue. When, and this is showing the magnitude of things, there was $5.85 billion of revenue expected. I think it is safe to say that despite the fact that we are still witnessing a company in growth mode, they are no longer a startup. When you're talking about these kinds of numbers and when you're talking about three consecutive profitable quarters, you're not talking about a startup mode company, but you can still be talking about a company that is in growth and expansion mode, and they seem to be very much so in growth and expansion mode. The number 2 point that I would like to talk about is the fact that sales of models S and X were up 9% year over year. This being despite the fact that Elon has even said, basically, they're making the Models S and X at this point for shits and giggles. It doesn't matter that the CEO thinks that if the sales are up 9% year over year. Because what you're talking about there is you're talking about in the Models S and X, the company's high margin vehicles. Now, the last profit margin, here's something that I think is worth talking about. The last profit margin on a Model S that I could find in my research, now, I'm sure the numbers are out there someplace, I couldn't find them, is a few years old, and the profit margin on the Model S was 25%. Q1 2020, the auto profit margin was 25.5%, which includes the vast majority of those vehicles being the low margin Model 3, as well as what should have been an anti-margin Model Y as it is ramping up. Not to mention new vehicles from a new factory in China. So exactly what profit margins are we seeing on the high margin profit or Models S and X at this point? It would be interesting to see that, and I would. It is hard to say, but I would be willing to bet that despite Elon Musk's comments, if the sales of S and X continue to be percentage points up, nearly double figure percentage points up year over year, we're not going to see those vehicles go away. And it would stand to reason that if there is money coming into the company, as we are seeing that there is, it may even benefit Tesla to refresh those models, not just to give a plaid model, not just to add plaid to the verbiage in front of those models, but to actually refresh and redesign them, give a Gen 2 to the outside of the vehicle, not just the inside, to reinvigorate sales, especially if, despite the fact that we have so many more lower margin vehicles coming off the line, and we are seeing growth of that profit margin in the automobile sector, growing to 25.5%, which is more than the old margin on the high margin vehicles. What kinds of margin could we see from those vehicles is what I'm getting at. The number 3 thing that I think is worth talking about here is the gross profit and the GAAP profit. $1.2 billion of gross profit and $16 million of GAAP profit. Now, it's a large discrepancy, but it is illustrative of the vast numbers that this company is going through, which leads into the 4th thing that I think is worth talking about. Tesla has $8.1 billion sitting in the bank. $8.1 billion in cash reserves. And this does not count, as far as I can tell, this does not count the money from self-driving that has yet to be recognized. I don't think Tesla is allowed to include those numbers in these numbers. This is up from $6.26 billion last quarter after a $2 billion capital raise. Now, obviously, we're not looking at $8.26 billion, so some of that cash went somewhere, which is that they lost $895 million in cash flow, which is 0.5, which is in inventory that they have built but were not able to deliver. So, all of that said, most of the consensus opinions that I was able to come across say that Tesla is in the economic cash position to be able to survive 8 quarters of shutdown. Hopefully, we don't get there, but that leaves them in what I am willing to bet is one of the best positions of any of the auto players. The 6th thing that I think is worth mentioning here is that you're looking at a company that was profitable, but still spent $450 million in CapEx, in capital expenditures. This is not despite a shutdown. This is not despite a pandemic. This is not despite everything that could go wrong, basically going wrong this quarter. This is not a company that is looking to stop or even to slow their own growth. The 7th thing that I would like to talk about is the storage deployment. These numbers were disappointing for many, but I think that whenever you're looking into something that is growing but still disappointing, you're in a position of power. The storage deployment this past quarter, quarter 1 of 2020, was 260 megawatt hours, which is up 14% over 229 megawatt hours from quarter 1, 2019. In this, they reached 100,000 deployed Powerwalls. Just for a bit of perspective, there are an estimated 128.5 million homes in the United States, so they have penetrated 0.0007% of the addressable market. Now, that's nothing to get too excited about, that there is so much more market out there, but it is substantial that 100,000 Powerwalls have been deployed. And it's not nearly all of the homes that could get them, especially when you're looking at places like California, who are reportedly going to be requiring solar, some type of solar production on new homes. If you're already going to have solar production, why not have the battery to go with it? Now, California is rather left-leaning. It is not to say that everyone is going to go that way, but it is certainly within the realm of reason that more states are going to move in that direction, especially if you start looking at, well, any home built in the state over a $1 million price point is going to have X, Y, and Z on it. I think that those are stipulations that are very much within play over the next few years. For a little bit more context on that number, 100,000 Powerwalls is about 33% of the homes in Montana. I don't know what that's worth. I just looked it up and thought that it would be funny to shit on Montana a little bit. Number 8 thing that I would like to look at here is the solar roofs themselves. 1,000 per week production has been achieved, and there is over 1,000 per week demand. The bottleneck around this part of the company is installation. You have to have 1,000 teams able to deploy one of these roofs in 1 week to make that doable. So in this, it is funny that this is a company that is constantly restrained by bottlenecks in one area. So on the automobile side and in the storage side, it is the ability to make batteries. In the deployment of solar roofs, it's the ability to actually put the roofs on houses. A little bit of context on this number. I found an article on Inside EVs from Mark Kane that said 1,000, from which the math may be extrapolated to say that 1,000 roofs per week is 208 megawatt hours per year. A little bit of context on that number is that New York goes through 11,000 megawatt hours per day, which means that at the rate of 1,000 roofs per week, it would take 53 years of installments. And again, check my math, because it's 100% possible that I've got this wrong. These are not things that I have much experience with. It would take 53 years to negate 1 day of power consumption from New York. The 9th thing that I think is worth talking about out of 10 things here is Terra, Texas. Elon Musk noted that Battery Investor Day might be held in Texas if they cannot get clearance to do so the third week of this month in California. Elon Musk then mused about terafactories being necessary because gigafactories are old hat. Now, Elon Musk also sent a tweet out a while ago about Giga Austin, Giga Texas. This is going to be the very first Terra factory, not Giga factory. I think that is worth noting. Everything is bigger in Texas, but it is certainly not certain that the next factory will be in Texas. But I think that it stands to reason that the next factory will be in Texas, and it will be a Terra factory. And I am going to do a video about that on its own. I think there's a lot of things. I'm going to do a video about speculation for Battery Investor Day in general. And I think there are a lot of things that are going to be coming out of that Terra factory that are worth looking at. I think, obviously, that's where they're going to build the Cybertruck. They've already said that. It's probably, when you're looking at new battery technology and breakthroughs there, and the delays in the semi, you're probably looking at the semi coming out of there as well. But these new batteries that Elon Musk is so excited about, I think when you start looking at that, you're looking at the Roadster being delayed as well. And you're looking at the Roadster that would need a higher performance battery. You're looking at the Roadster that would need to weigh less and do more to get those speed numbers and those distance numbers. And I think you're going to see those coming out of Texas as well. Texas, by the way, also a place with a whole lot of land. Not quite as much land as you have in China. But when you're looking at the way things are developing in China, that's a lot of land that Tesla has, and that Tesla has been able to build out and build up and expand upon. There's a lot of space there in China, and I think Elon would be looking to get quite a bit of real estate in Texas as well. Not quite as expensive as it is in California. Not quite as cheap as it may be here in the state of Missouri, which, by the way, I'm not going to stop tweeting you, Elon, but maybe for the next Terra, we could have something in Missouri, like Joplin, who offered $1 billion in tax credits, etc. But the last thing that I think is worth mentioning is something else that I'm going to be making a video about here on the channel, and that is Elon Musk will not stop talking about HVAC systems. And there are a lot of reasons that this makes, so much sense. Too much sense, in fact. And the number one should be obvious to anyone who follows Tesla, and I sort of touched on it a little bit earlier in this video. There is, to that, no battery constraint. There's no battery constraint there. You're not making a battery for your HVAC system. Now, one of the other reasons this makes a whole lot of sense is the ecosystem of it. The HVAC system takes up the most power in the home. So there's a lot of places that we can tweak things if we are as brilliant as Elon Musk at all. And if you can make a system that is 10%, just 10% more efficient than the normal, GE version of things, which hasn't been changed in 30 years, if you can make things 10% more efficient, well, why wouldn't people go out and buy that Tesla HVAC system? Now, when you're the guys that put together the HVAC system, and you're the guys that put on the solar roofs to power the damn thing, and you're the guys who give you the batteries to save the power to run the HVAC, not just during the day, but during the night, and the same guys that sell the cars that run from your roof, it makes a whole lot of sense for an ecosystem. Where else do we hear the word ecosystem? A whole lot in this level of company, Apple. The Apple ecosystem, they call it. You got your watch and your phone and your Apple Ring. I don't know. I have no idea what all Apple makes. I don't use those things. You can tell that by the fact that I'm shooting this on a shitty phone right now. But I think that it makes a whole lot of sense to get into that business as well, and I'm going to put together a whole video on that as well. But that is all I have for the Tesla Q1 2020 earnings reactions. I'm going to be honest, with this company, I'm still a little out of my, not a little, a lot out of my depth and trying to research and understand things. So when they drop all the information like they did in that Q1 2020 report, and there's an hour and a half, I think, call, despite the fact that 15 minutes of that earnings report call was dead air, it takes a while. I don't have the tools to process all of it, but this is what I got. What is it that you got out of the Q1 2020 Tesla earnings call?